Hello and welcome to Macros with Mythili, the ET Now show where we take a hard look at all the major macroeconomic issues and developments in India and overseas. But this time, as we step into the new year, we're going to try and read the tea leaves for you with two of the most eminent economists. We have with us Dr. C. Rangarajan, former Governor of the Reserve Bank of India, former Chairman of the Prime Minister's Economic Advisory Council to the former Prime Minister Dr. Manmohan Singh, and Dr. Eswar Prasad of Cornell University. Welcome to the show, gentlemen. Dr. Rangarajan, as we enter the new year, what is your prognosis for the global economy? And has that changed post the Fed action?
Well, the global economy has shown some signs of recovery. I would think that the recent decision of the Fed is in some sense a recognition of the fact that at least the US economy will do better, but not very much better. So the overall expectation is that the advanced economies, the growth rate will be only about 2.2% in the coming year. Therefore, it is not a big jump, but certainly it looks like that the world economy will do somewhat slightly or a shade better than the current year. It so happens that the benefits of the decline in oil prices has not really helped the advanced economies to grow faster. One had thought that this would act as a great fillip to accelerated growth, but that has not happened. But US, because of the flexible markets that they have, has been able to build up, and therefore the American economy will certainly do better, but the European economy may not do very much better. The same about Japan, but China is another country whose economic growth may also not be as good as it has been in the past. There are definite signs of slowing down of growth, but the rest of the world may have somewhat better performance. But obviously the oil export countries like the Middle East will continue to have problems because of the decline in oil prices. But all expectations are that the oil prices will continue to remain low in the coming year also. So taking all these factors into account, I would say that the world economy may be a shade better than last year, but not very much better.
Eswar, let me ask you the same question. As we enter the new year, what is your prediction for the global economy? And has any of that changed after the Fed hike rates?
Certainly, what the Fed has done portends that the US economy seems to be well on its way to a more durable recovery, although in some dimensions, such as what is happening in the labor market, in terms of the number of part-time workers, the number of people who are no longer participating in the labor force, certainly it's not a great sign. But I think one concern that remains pertinent for both the advanced economy and emerging market world is that of deflation, because deflation risks are still very important concerns for the major advanced economies, especially the Eurozone and Japan, and with the weaknesses in commodity prices, both because of rising supply as well as weak demand, especially in China, but also in the rest of the emerging market world. There is still the prospect that we could be facing not inflationary risks over the next year, but deflationary risks. And the problem again is that there is very little room in most countries for monetary policy to do very much more, and fiscal policy is also quite constrained. So the answer for many countries is still to try to go back to the key reforms, of fundamental reforms in terms of improving productivity growth, in terms of improving financial market performance, in terms of improving labor and product market flexibility. But these are all things that are very difficult to do politically, especially in the short run. So if there are further negative shocks that hit the world economy in the next year, the risk is that there isn't much room in terms of policies to do much more. So I think right now the prospects for next year look somewhat better. The US is doing better. We're seeing slight improvements in activity in Europe. China seems to have stabilized. but I still see it as a very fragile situation for the next year.
So you're certainly right when you talk about the recovery in the US economy, but the rest of the world is not really recovering so well. So my question really is that can the US be the single engine of growth, number one? And in the past, we've seen the Fed change tack in response to slower growth, whether in the US or elsewhere. So what are the chances that it'll have to do the same thing this time round as well?
Well, as I said that one doesn't expect the world economy to pick up strongly next year. All that I was saying is that perhaps since the US still plays a big role in the world economy, its doing well might help in the economy doing a shade better than the current year. After all, even in the current year, 2015, the world economy did not do that well. I think the estimate now is for the advanced economies is a rate of growth of 2%, much lower than what was expected earlier. Therefore, I agree with you with the assessment that if you look at the globe, other than US, there are no signs of any strong recovery or strong pickup anywhere else. But some of the developing economies, like in the East Asia, other than China, could do better. But on the whole, the performance of the global economy will depend on what the US does or what the US economy does. But on the whole, it is not too bright a picture.
Sitting in the US, Eswar, how strong do you feel the US economic recovery is on the ground? In the past, we've seen the Fed has had to change tack. Will you see the same thing happening again this time around as well?
Now, the Fed has again indicated that although it's raised its policy interest rate by a 1/4 percentage point, it's still very low and monetary conditions are still very accommodative because the Fed has a very large balance sheet because they purchased a lot of US government securities and they've made it clear that they're not going to let the balance sheet become smaller in size. That is, they're just going to keep reinvesting those securities. So there is still a lot of monetary accommodation in the pipeline. And the budget agreement that seems to have been worked out between Congress and the White House suggests that there is also some fiscal stimulus coming. So there is adequate support for the US economy. But having said that, wage pressures are still very, very muted. There is very little sign of inflation moving back towards the Fed's 2% target range. So I think this is just a preemptive move by the Fed to make sure that it doesn't have to take very aggressive action in the future if inflation starts rising very fast. But as of now, there is no sign of that. So I spoke about the US having a somewhat more durable recovery, but again, that's a purely relative term at this stage because one can by no means declare victory already in terms of a solid US recovery that seems to be fully sustainable and on firm ground.
How much does the global economy really impact India's performance? We've always prided ourselves on being entirely internally driven by and large. So shouldn't that give us a welcome buffer?
Well, it is true that the Indian economy does not depend that much on the rest of the world, but the rest of the world still counts. I think when the export demand falls precipitously, as we have seen during the current year, it has an impact on the Indian economy. After all, of the four forces one normally lists in terms of the demand side impact, external demand is one among them. After all, India is getting more and more integrated with the rest of the world. The external sector, the share of the external sector has increased over the last two decades. Therefore, a continuing fall in the rate of exports has some implications for the overall industrial and manufacturing growth in our country. Therefore, we cannot ignore what is happening in the rest of the world. I think if the world economy does better, it will be better for India also. And please remember that even between 2005-06 and 2007-08, when we did extremely well, it was also helped by what was happening in the rest of the world. The rest of the world was also booming at that time. Therefore, we cannot ignore that. But because particularly at a time when the domestic demand is also not picking up, the external demand does play a critical part.
Ishwar, you seem very confident about the US economy recovering, but can the US really be the single engine of growth for the entire globe? And for how long can it be so?
It's going to be very hard for the US to pull the rest of the world along on its coattails, because now the US economy is a much smaller share of the world economy than it used to be a decade ago. And while the levels of leverage, that is debt, have come down a lot, US households still have a fair amount of debt. The low levels of interest rates certainly helped to perk up the US consumer and allow higher household consumption. And even the marginal rise in interest rates could tamp down consumer spending a little bit. So unless the rest of the world starts pulling its own weight, and in particular, if China doesn't stabilize its own growth, it's certainly going to be a difficult haul for the world economy. Having the US do well is certainly a very good sign for the rest of the world economy, but it's not going to be enough for a durable world economic recovery. The US cannot do it by itself anymore.
I'm afraid I'll have to interrupt you there for a moment because it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're trying to take a peep into the future to see what 2016 holds for us with two of the most eminent economists, Dr. C. Rangarajan and Dr. Eswar Prasad. So, low oil prices have definitely been an unmitigated good for India, and there is no doubt that it's put us in a very sweet spot. But for how long can we expect these low prices to continue? And how can we prepare ourselves for the inevitable reversal?
Well, I think that will happen, but I do not expect this to happen over the next year and a half or so. I mean, I think it's we are talking about the coming year, and one can assume that the decline in oil prices that we have seen may not decline, may not further deteriorate, but certainly I do not expect the oil prices to rise in the coming year. If the world economy is also not expected to pick up very much, the oil glut that we are talking about will continue, and therefore oil prices will continue to remain low. Yes, we must be prepared for it. We must expect sometime or other the oil exporting countries to adjust their economy and try to push the oil prices up, but that will happen after a few years, not immediately.
What is your best guess? And I'm deliberately calling it a best guess, Ishwar, as far as the commodity markets is concerned in 2016.
I think we are going to see a fairly extended period of commodity weakness. Demand around the world is relatively weak, and one of the major contributors to the increase in demand in recent years has been China, which was on a large investment boom for many years. Now the Chinese government is trying very hard to change the growth model away from a dependence on very high levels of investment towards a more consumption-driven economy, and also move from an industrial economy to a more services-oriented economy. China has been making some progress in this direction. So both from a structural perspective, given the change in the structure of the Chinese economy, and from a cyclical perspective, because the Chinese economy is not doing so well, we are seeing a substantial decline in China's demand for commodities. And that's affecting, I think, a large number of countries around the world, both emerging markets as well as advanced economies like Canada, Australia, New Zealand, that rely to a significant extent on commodity exports. And this will certainly put a lot of pressure on economies that rely on commodity exports, especially oil exports. We've seen countries like Venezuela already facing large pressures, and I think in the Middle East there are many countries that are going to get increasingly squeezed given how much they rely on oil revenue. So we could see some economic instability as well as potentially some social instability in many of these economies if oil prices remain as weak as they have been or even decline further, which is certainly not an unlikely prospect.
So can one assume that the battle against inflation is largely being won as we go into the new year? Or does one still have to be very watchful as far as inflation is concerned?
Well, of the three components in inflation, if you look at food, fuel, and manufacturing, fuel and manufacturing are under control. I mean, for a variety of reasons, the the price situation relating to both fuel and manufacturing has been helpful. The decline in prices has been noticeable, of course, in the case of fuel, but in the case of manufacturing too, because of the weak demand and the excess capacity that exists in the system. Therefore, once again, we are going to see inflation being driven by food. In fact, what we have seen in the last few months is the pickup in inflation primarily because of food. The expectation that the consumer price inflation will be below 6% is justified, and I believe that even in 2016 it will happen. But 6% itself is high, and bulk of it will be contributed only by food inflation because we have one more year, I mean even in the current year, of low agricultural production, and there are other factors that have also contributed to the decline in agricultural production. Therefore, food inflation is going to be a matter of concern in the coming months. But overall headline inflation, even according to CPI, will perhaps remain below 6%.
So as we step into 2016, sir, where do the bigger challenges lie? In the economic arena, the fiscal arena, the monetary arena, or in the political economy arena?
Well, obviously the political economy has an important effect upon the behavior of the economy itself, because when you talk about a favorable investment climate, it is determined not only by economic factors but also by non-economic factors. Very quite clearly we saw that in the earlier period also. Therefore, non-economic factors cannot be brushed aside when we talk about animal spirits or when we talk about the buoyancy of investment. That is critically important. But at the same time, there are economic factors which need to be taken into account while pushing up. I have always said that reforms are only the first step. The reform, the policy framework or the environment did not change very much between 2005-06 and 2007-08 and the post-2011 period. But there is a vast difference in the rate of growth between the two periods. Therefore, reforms are necessary, but nurturing the investment climate is extremely important. We need to get the private investment to pick up in all areas, manufacturing, infrastructure, and so on. I think that the growth rate of the Indian economy in the current year, the current fiscal, is no more than about what it was last year. If anything, it may be a shade better. Even the midterm review said the rate of growth will be only between 7 and 7.5%. That's a fair and good assessment. Therefore, that means that the rate of growth of the economy during the current fiscal will only be the same as last year. And given the conditions that we see now, perhaps the growth rate next year may also remain only around this thing, unless there is a strong pickup in private investment. Public investment is doing better. In fact, numbers do indicate in the fiscal area that capital expenditures have increased substantially during the current fiscal. But that alone cannot provide the adequate stimulus to the economy. That is important, and that has played an important part. But going ahead, unless private investment picks up in 2016-17 fiscal, we cannot expect the growth rate to become much stronger. But then you also mentioned about fiscal. I think the fiscal situation is going to become difficult in 2016-17. The situation was manageable during 2015-16. Available numbers do indicate a strong pickup in revenue, and therefore they were able to manage, or the government is able to manage the level of expenditures indicated in the budget. The fiscal deficit so far is under control. Therefore, the year will end up with whatever with the fiscal deficit that has been indicated in the budget. But going ahead in 2016-17, I do see much bigger problems in fiscal consolidation. The 7th Pay Commission recommendations will impose a big burden, even after taking into account what they may collect in the form of additional tax revenue. The burden will be equal to, as has been estimated, about 0.4% of GDP. Therefore, fiscal consolidation is going to become an extremely difficult affair during the coming fiscal. Therefore, it is again imperative that we see a sharper jump in the growth rate in the next fiscal. But as of now, there is not enough evidence of the private investment picking up.
So what would you really worry about, Eswar, as far as India is concerned as we step into 2016?
The biggest question for India still remains whether the Indian government is going to aggressively push forward a broad range of macroeconomic and structural reforms that I think are necessary for the Indian economy to be able to take advantage of these very favorable domestic and external circumstances and use them as a springboard for solidifying India's productivity growth and longer term growth. So ultimately the focus should be on India's policies, not in terms of worrying about what needs to be done in terms of responding to external circumstances. I hope India gets it right. This is really a very good time when the Indian economy seems to be one of the fastest growing economies in the world, when foreign investors are still looking upon India with some favor, and with all these stars aligned, it will certainly be a shame if India doesn't get done what it needs to get done.
Well, it's been absolutely fascinating talking with you, Dr. Rangarajan, as well as Dr. Eswar Prasad. But I'm afraid that's all the time we have in this edition of Macros with Mythili. Clearly, there are challenges as we step into 2016. The world does look better, but is that good enough? That remains to be seen. Thank you so much for joining us and sharing your views. Thank you also for watching Macros with Mythili. We'll be back next week with yet another edition. But till then, it's thank you and goodbye from all of us at ET Now. Have a great year.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.